What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, we are breaking down 5 cheap stocks that you could potentially go long in with LEAP options for a smaller portfolio. So if you're excited for today's video, feel free to like the video, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. And again, as a reminder, if you are watching this video, around 80% of you guys are not subscribed that are watching it. So if you're not subscribed, again, it's free of charge. And if you don't like what Fridge Financials does, feel free to comment in the comment section what it is I could do better, obviously, as we continue this journey through financial freedom. So what you will see is we're going to go over 5 companies that I would think I would want to have in my portfolio for LEAP options. I'll probably actually open these positions up on my Webull account that I'm on right now. The only problem is right now I can't because of I'm restricted right now in pattern day trading. This is a smaller portfolio. So I have to wait until the days are up, and then I'll be able to go right on into these positions here. So the first one that I want to do is the Honest Company. They had their earnings recently. They upped their guidance. They had a lot better of income compared to last year. It went from negative income to positive income. Honest is a company that has like products like diapers, baby products. They're organic, and it's one of those things where people like, obviously, the organic idea now because there's less chemicals and all that kind of stuff like that. And a little bit of hype behind it, I feel like, right now. And taking a look at the chart, again, what I do for charting is I do the Fibonacci retracement levels. This yellow right here is the 50% retracement, and this one is the 0.618 or the 61.8% retracement section right here. And so I charted out, the recent highs that we had on the daily for Honest Company all the way down to the recent market lows. This was after earnings. Again, their earnings were solid, and they forwarded their guidance. They upped their guidance for the forward progress. So this little reaction here, I think, is no big deal. What we're looking at, and so what we're going to be talking about now is taking a look at seeing how it's following the patterns here. So taking a look here, again, it kind of retraces back into these 2 levels here. Breaks down, support down here, broke down, retrace back up to that golden ratio, that golden zone right there, and now we're back down basically to $4 or so. Now, if you take a look at the options chains here, this could be a little bit of craziness at first, so we're going to kind of explain the best of my abilities here. Again, buying a LEAP option is buying an option that is really far out to give you the time for the stock to move with you. The shorter the expiration date, the more risky it is because there's less time for the stock to move in your favor. So, for example, like August 15th is this week, the end of the week here, and this might be a very unlikely position to take. But for example, if I want to go to February of next year, February 20th right here. So here's the options chain we're looking at here now. And what I would also be doing here is buying what's called in the money, ITM, you might see on your brokerage. In the money means that, again, it's trading at $4. This is a $2.50 strike price. And so what the idea is behind it is to figure out, well, Fred, why would I do that? The idea behind buying an in-the-money LEAP option here is that, again, the 250 strike price is like, well, it's already above 250. But again, you'll be paying, $1.75, $1.75 for the actual contract. $2.50 plus your premium, you're paying $1.75, puts your break even actually at $4.25. Which basically means that as long as Honest goes above $4.25 between now and February of next year, you will be able to start making profit on this position. And $4.25 isn't a crazy move. Again, it's at $4 right now. And the level of the support level that I have for the Fibonacci level is $4.79. So way above that in this case. Obviously it can come back down to $3.50 for sure. And you might have to dollar cost average if you wanted to, your position. But again, moving up to $4.79 is going to give you some really good money. If it goes up even into that golden zone of the 50% retracement at $5.59, that's even more money that you get as a result. And again, this option is really, really cheap. It's $175 for a LEAP option. $175. If you have $1,000 portfolio or even a $5,000 portfolio, that's going to be literally a small impact on your overall position. So I like Honest Company. I like what they said with their guidance and how they forwarded it. I think they have some good potential in the future. So I would do that potentially. And I'll probably have a video updating my LEAP options a little bit later on once I'm able to trade them again. Because again, I've got to wait till the pattern day trading rule is up for me. The second one that we have, and I know it's a really interesting one and maybe a controversial one, is Big Bear AI. Now, Big Bear AI obviously had their earnings. Their earnings were a huge, huge miss. Their earnings per share came in a lot lower than expected. They cut their guidance. The only good thing that's positive is that they have the amount of cash is at record highs right now. Big Bear AI basically is what people have been saying is it's the much smaller version of Palantir because they use AI for defense. They could use it at airports, security, like all those kind of things there. They do have some government contracts, which is a good thing, obviously, to see. But so here's the chart on the daily for Big Bear AI. And again, before earnings, it was trading on the $7 zone right here. And now we're down at 492. So 492, which brings you basically, if you take a look now down to let's go to the 4-hour here. So go to the 4-hour chart. So here's my 4-hour chart of Big Bear AI with the Fibonacci level still. And again, as you can see, we trace back into that red and that golden zone right there, as you'll see here. And it's now just broken through. Next level support for me personally, I have is at 4.248, which, as you can see, has kind of become that little bit of a support. Again, it came down and bounced, then it broke through again. Didn't mean to do that. Control Z is your best friend here. Came up and retested it, broke through it, and now we might be retesting that 425-ish level, depending on how the market reacts to Big Bear AI today. But again, this is a company, AI sector obviously is a huge booming thing right now that we have. Which is, something that's really good to know. And on top of that, again, they're in the defense sector. They have, contracts with the government. So it's not like they're going to go bankrupt anytime soon unless the government pulls all their contracts out. They probably like what they do with Big Bear AI and their software. You can look at their website and see what they actually do. It's really, really fascinating stuff. But this could be a very good opportunity to buy a LEAP option. Now, the only thing I will say with LEAP options for here is that say you wanted to go to, March 2026, these are going to obviously be heavily impacted and heavily adjusted because this is at a time before market close and earnings. So I would love to see what these come in with. My guess would be, $100 to $200 cheaper potentially here, but Big Bear AI could be a potential long LEAP option I would want to buy in my portfolio, even though they had the massive sell-off here. I'm going to give it a couple of days to the end of the week, maybe buy a LEAP option end of the week once maybe the panic selling and the shorting kind of cools off a little bit. So Big Bear AI, another good one that you can get some good contracts with. Even now, even if you did get into one of these, your LEAP options are, only a couple $100, which is really good. And the thing also that's nice about LEAP options is that you have a very low theta value. We talk about theta decay when you're selling options. So theta decay is good when you're selling, but it's bad when you're buying. So when you're buying options, you want your theta to be relatively low. And as you'll see that these theta values are super, super low, which means that big moves in the market might not impact this, option price as much. It gives you a lot of time for it to become positive, all that kind of good stuff in between. So, just something to keep in mind about for buying LEAP options here. So Big Bear AI, again, I can't give you an actual idea behind an option only because it's down 30%, and I would wait to see what happens after that. The next one I have is actually Grab Holdings. Grab Holdings basically is like Uber Eats, but over in the Southeast Asia area. They do everything from delivery to taxi driving, stuff like that. They do basically everything over there in the Southeast Asia area. And they've actually been a really good, profitable company so far. Which has been absolutely amazing to watch and to see. Here are my fib levels again on the daily chart, as you will see. And what's really interesting is that this one has been following these levels pretty nicely. It kind of comes back into these two zones here. You can see these levels of support. You can see levels of resistance here. Right here, it looks like there's a nice level of resistance right now. It kind of tried to make it a support, but it broke right through it back down to 418. So the next level up, if it bounces off of this support level right here, would be 521-ish or so. These are my fib levels, right? And if you go to the options chain, again, you go far out into, January, 2027, absolutely not. January 26th, 2020, January 16th, 2026 here. Again, options chain, a couple $100 you're looking at. But again, remembering that right now it's at 482. So if I was to buy, say, a $3 strike price here, deep in the money, as we know, it has a very, very low theta, so the value won't be lost as much. Last time someone bought it was about $2, might be, or $200, might be a little bit cheaper now. But again, $3 plus the $2 you're paying, you're looking at a $5 break even strike. Anything above $5 is profitable. And as you take a look and see, again, the next level we're going up to would be 522. So above that $5 break even price. So very, very good in that aspect of things because, again, $200 or so gives you access to 100 shares of Grab. And again, as it gets that nice little, rejection, it comes back up to 522, you're able to make some really good profits as a result. So Grab Holdings, a very good one, I think. And I've liked watching how much it has respected the chart here. If you were to sell a cash secured put, the 450 would be a really good one, just as a side note. If you were to sell an option, say that 30 days out, the 450, the premiums aren't really that good because it's very unlikely to happen already. But, you can make, about 1-2% probably or so every single month, give or take on that kind of level there. But these are LEAP options we're looking at for today's video. So that's the one I would go with for a LEAP option. The next one, which is again is an earnings play, is ACHR Archer Aviation. Again, the problem that we have right now is that their earnings seem like they're missing, it looks like, because it's down like 8.5% pre-market. So we don't quite know what the options chain will actually look like as a result of it. But in taking a look here again, it kind of seems to respect some of the levels here of support. Again, the wicks are a little bit of a different situation compared to the actual bodies of the candle. But you can see, a nice little support right over here we had at 713. We're now coming back into that red zone right here, the 61.8% fib level. Again, it had a nice, rejection here, or a nice little support line in that golden zone here. Rejection, broke through. You can see it kind of following these fib levels very, very nicely. If we go to the 4-hour one, you can see that it actually had a really nice retest at around 822. My low is at 815. So it's about a 7-cent miss, or it's about 7 cents away from that one. And again, you can also see the consolidation here in this golden zone here. So they got the consolidation. So this could be a really good opportunity to go along with Archer Aviation with this kind of selling pressure that you were getting here. Again, looking at 867 here, but you can get a nice little rebound depending on what the option chain comes out to be looking like here, as we know. Again, LEAP options, maybe you're going to, LEAP options, like a really good one. It could be like maybe a June 18th one. Those ones get a lot more expensive, obviously, because there's a lot more time for the option to do its thing. So you got to pay more premium for it up front. But again, these are obviously going to change because Archer is now down at 867. So, and about $1 difference or so. So these are going to probably change by about $100 or so, is my guess would be. A little bit more expensive, but again, still $500, for example, here to give yourself, access to 100 shares of Archer Aviation at, 8 something or whatever the case is actually a really good thing to consider. And, if you pay $500 here, $5 strike price, about $1,000 break even or so, or about $10 break even or so. And it was trading around that $10 mark, pretty much right around here. So it is a good potential, play to play after the earnings dies off a little bit. That's usually how I think about it, is that usually give it a couple of days before you get into positions, because we don't know how much of a reaction the market's going to have to selling this off here. Maybe it's a day, maybe it's 3 days, maybe it's, 5 days. Give yourself a little bit of time for that one as a result, and it'll definitely benefit you long term. Oh, okay. Last but not least, and believe it or not, I know you're thinking, well, Fridge, what in the heck? I like Snap right now, these levels here. So Snap has had a miss on earnings, and it came down to like 20-ish%, I believe, or something like that. I don't remember the number was. But it's back down to that $7 level that it had previously after their earnings was over here. It came down to about $7 again. This company was trading at about $18, and at one point it was trading even higher than that. It was at like $60 or something like that, if you take a look. So this company is about to $80 here. So this company has really gone through a lot. And, the way I'm portraying this one is not also from a technical perspective or from a fib level perspective. Also from my knowledge of watching my students in school, they're always on Snapchat. They're always messaging each other on Snapchat. Like, it's a very powerful tool, and it is a very used social media platform that people, I think, tend to forget compared to Instagram, compared to Facebook, compared to TikTok, obviously. But so Snap is a pretty useful one that people have done a lot with, and so what we're looking at right now is that's coming back down to that $7 level or so, which, could be a good buying opportunity to see where it goes. As you can see, it's kind of, it consolidated in this golden ratio, this golden zone right here. Then it broke through. Then it had a little bit of support right here, but then it rejected off of it. And then you can see kind of the patterns here. It's rejecting off of this level right here. So your level of resistance to go to is 966, it looks like. So if we do get that kind of rebound opportunity here, it could go back to that 966 level. And if you do an option, again, you do a leap option going away to like, January, even March, for example. Again, you're looking at 966 right now. It's trading at like $7 or so. So if you were to get in at Snap, say at $4 strike price, it costs you $3.55. So you're looking at a $7.55 break even right here, which is literally like no move whatsoever. And then on top of that, again, if it rises up to that $9 mark, you're making a lot of money here. So Leap options, very, very good if you believe in the companies. This is obviously the cheaper options to do leaps with. If you go into those bigger companies like NVIDIA, like Apple, obviously those ones have a lot more expense to it because those ones have a lot more market cap. Their share price is higher. But these are some 5 options I would consider looking at buying leap options for the next, 6, 12 months to kind of see if we can be able to make some profit here. So thank you guys so much for watching today's video. If you did make it this far in the video, feel free to like the video, subscribe to the channel, and as always, turn those bell notifications. I will have another video coming out later on about, medium priced leap options here for you guys to take a look at. I hope you're making money in the market in some way, shape, or form. And as always, I will see you in the next video.